Hey guys, Caio here, founder at Lumx, and welcome to another Stable Talks episode. Actually, the first episode of 2026, and I'm here with Julian. How's it going, man?
Hey, Caio, Happy New Year to you and to our audience as well. I'm really excited about this conversation.
Yeah, me too. Today we'll have a chat with a guy that I like a lot. He's a great fellow stablecoin founder of the industry, and I follow his work a lot. I love what he's been doing in the industry. So here we have Juan from Capa. How's it going, man?
I am very happy to be here, guys.
Nice. We are happy for you to join us, and it's amazing to have a founder of one of the best industries in one of the best places in the world to make this industry to work, which is Latin America. So happy to talk with you.
Yeah, sounds good, man. And like to kick things off here, of course, people that are in the bubble of stablecoins, of course, might know you and follow you what you guys been doing. But for the ones that are not that familiar, who are you? What is your background and what made you found Kappa?
Yeah, so guys, my name's Juan Diego. You guys can call me Juandi for short. Background, ESG, renewables, never liked it, but I always had love-hate relationship with crypto. So if I had to be very candid, my background is definitely 100% crypto. I was one of the first hires for WorldCoin in Mexico, later led the infrastructure grants program or developer tooling for Arbitrum. So signed a lot of checks to companies that were building crypto infrastructure that we're basically using today. And then I just saw that I just wanted to do my own thing, so hop ship, and decided to build Capa. Capa means the word layer in Spanish, like the layers of the blockchain. We do stablecoin FX in emerging markets, focusing on enterprise, publicly listed companies, regulated financial institutions, and a market making side for non-USD stablecoins, which we can chat about that later on. How did I get to use stablecoins? I know the problem firsthand. So to pay for college, I used to do a lot of stablecoin arbitrage, going into informal markets with a duffel bag full of cash, and then swap them for USDT, and then sold it for the positive 2 to 3% on Binance so that I could pay for my college tuition. So been here for a long time. We don't sell at 2 to 3% spreads anymore. So yeah.
That's amazing. Actually, like we share kind of a similar background. I discovered Bitcoin at that moment. It was in 2016. I was living in the US, and I discovered that the best way to move money between Argentina and the US was Bitcoin. So from Bitcoin to this where we have today, there's a lot of advance, and it's way cheaper than the 2 and 3% that you mentioned. So yeah. And have you discovered like during that process that like some people were having the same problem that you had, or like companies were having some issues? So how do you like transform that personal issue you had or that personal discovery from a business opportunity?
Business opportunity, we basically took my personal problem and took it at scale. So when Kappa initially got its first cash of funding, we just went into every single Binance P2P market that we had access to, and we started crunching it. So we didn't exactly understand liquidity issues. And then that we saw that when you inject $500,000 into a market like the Dominican Republic, basically the price falls from 3% over the spot rate to spot or below spot. I guess it was a lesson learned, and we exactly couldn't scale going that way. Business case was mostly that I just saw it happening in family. Family had to send payments over to the US, or they had to send payments over to Europe. FX was a very big thing. When we started the business focused on the Dominican Republic, if you were to buy dollars, the dollars go to 5% over spot if you were to buy from a money desk inside a bank. And then in Mexico, the spread is very tight. So what we basically said, like, look, guys, stablecoin is our forte. We've been building these relationships for more than 6 years. We have very good circle infrastructure, amazing infrastructure with Tether, built an in-house infrastructure to move assets from A to B. So why don't we scale this into an FX business to service companies on it? Initially started being sold as a consumer distribution ramp. So basically like an on and off ramp for like wallets like MetaMask or wallets like Coinbase Wallet. But then eventually we just found out that people just wanted like the whole B2B aspect of it. And that's where I think that a lot of markets, specifically in South America and North America, they have a big differentiation. And it's like the pitch I always give to people is like Brazil and Mexico have a very similar behavior because 95% of the payments are going to be B2B. And then when you go into Argentina, or when you go into Colombia, or when you go into countries like Venezuela or Bolivia, which are considered second tail, it's a lot of heavy volume, but consumer. So you get a lot of 10K tickets, 20K tickets. But I don't think those are the markets that scale. Initially, stablecoins are supposed to solve, and pardon if I go into a 5-minute monologue on this. I'm just like very passionate about it. They eventually start evolving between stablecoin FX infrastructure. So basically, a company like Lumx will open a market with Capa, let's say Mexico, and then Capa will open a market with Lumx in Brazil, and we will start sending our own customer pipeline. So initially, the first part of the big problem that we're trying to solve is like, I don't know what these stablecoin payment companies moves and what their customers are, but we have a specific need in the same corridor. We're gonna find a way to make it work. And then step two is like, okay, I don't own the customer relationship. Now I'm supposed to be the one that owns it. And it's more of a direct to merchant. And that's when you have a lot of companies that partner with banks. Let's say in the case of Lumx, for example, they have a lot of business flow. But in the case of Capa in Mexico, leveraging infrastructure like Bitso or certain Mexican banks, what they basically connect you is with a payment processor that processes a ton of payments. Sounds a little bit redundant for a lot of investment groups and companies and department stores that need just a way to send capital from A to B. And this doesn't only fall into the orchestration business, it's FX. These companies want tight payments. And Mexico is the tightest FX corridor that we're seeing in LatAm right now. It's, to some VCs, it's becoming a way that people can't even compete on it because the spreads are so tight. And it's like this company gave me 3 basis points and then this company gave me 5 and he's selling me at 5 basis points below spot. But these traditional payment processors and these enterprises, they don't really care about pricing. What they really care is that you give them a very realistic outcome of where the payment is going to land and from who is it getting to. And then pricing is the second topic, simply because it's something that you can negotiate along the road. Commitments and building these relationships just take a lot of time so that they fully commit into the pricing you want. And I guess that the biggest problem right now that has to be solved into a business case, it's like Brazil, Mexico need to focus on enterprise payments for a multi-trillion-dollar industry that is basically payments import-export. And then South America has to focus on a specific payment issue that falls into a macroeconomical side, which is basically like, we don't have capital to onboard people into a salt currency. So, yeah.
Yeah, I think no, a lot of things to discuss here, but overall, I think you're definitely correct. Like talking about the Brazilian experience here, and I was talking to Julián about this, 5 minutes before we started here. Um, the Brazilian market is being regulated now, so the pricing that you used to be able to sell like 6 months ago is like completely different from what you can sell now. Like the spreads, again, same as Mexico, are being tighter and tighter. It's being harder and harder to have like great margins on the trading specifically. So a lot of arbitrage in the ecosystem. So, but at the same time, specifically now as we speak, the market will be regulated and it will filter a lot of players in the ecosystem. So now on one side, you have like, a few players that can kind of control what will happen. But at the same time, since the enterprise market is being closer and closer, the banks are entering, the pricing is becoming less and less attractive if you, of course, only think about pricing. So my question is, we are, fellow founders in the industry. We know that we have tons of stablecoins, or stablecoin companies kind of doing similar things in the industry. In your perspective, like, what are the main things that you are thinking about and we can think about to differentiate ourselves in this industry?
It falls into 3 big things. It's every single stablecoin company has an ICP that they're very good at selling. BlindPay has a forte that they sell a ton to developers through a banking as a service suite. So they have a different pricing model that companies like yours and I have. Capa is very good at negotiating with banks and like telling them, I'm not paying that rate, make it cheaper, because this is going to be $1 million transaction that's going to be for a specific invoicing payment, or for stablecoin FX companies. We just understand the lingo quite well. We find different routes through local stablecoins or through using more stablecoins like MXNB and controlling the liquidity behind it to get as close to the spot rate as possible. So that avoids us from getting price crunch from the financial institutions that either we compete or we complement against it. And then I think that just the third one, instead of finding ICP or trying to find proper liquidity routes, it's just, and this is something that I don't think a lot of companies have, a spectacular customer service. I do think that a lot of the times when companies are trying to scale and you're running a team of 5 people or 10 people or 20 people, the CEO basically manages customer service. And I've seen this everywhere. So there's gonna come times like we opened China like 3 weeks ago and we just onboarded like a big customer and he's telling us like, you have to send me the MT103, and I'm like, I don't even know what an MT103 is, but I'm just gonna find a way to make it work, and then I'm just gonna see where the capital is at. And that kind of treatment that they don't specifically get with banks, because they're negotiating with a bank or with a banking clerk, which they don't exactly care what the performance of the bank is going to be, but I do care about what the performance or the treatment I give to my customers in my company is. It's going to be like the setting stone, or maybe a foundational way for companies to decide if they like the market that they're actually doing. It's not that we all like doing customer service tickets. Like, we as founders should not be doing that. But that's where I think that the needle in the haystack is. It's by establishing personal relationships, because this is where volumes start getting big. That $50 million business that moves monthly needs Caio treatment instead of customer support treatment for it to scale and to fully get the volume and to fully fulfill a narrative. And if that doesn't happen in the stablecoin industry, or we don't have that human tact, which in crypto 3 years ago, we did not have it. Crypto was a completely isolated environment of what happened in fintech, and it took us a very steep learning curve to learn to have patience with payments. And when you're building this amalgamation of, I'm going to settle China in SWIFT through a correspondent bank in Hong Kong or in Singapore, but then I have to do the stablecoin leg by doing FX with banks and then swapping it to USDC by wiring that to Circle, a lot of technical plus personal skills fall into the middle, that they're going to be like the biggest value add when you're trying to go from a 100K ARR company to a $3 million one. And then maybe a fourth one is compliance. If you don't get regulated, I don't think you can play in the big leagues. It's very straightforward. And it's not that Lumx has to regulate in the EU and open its own EMI. I'm the one that has a firm thesis that if you regulate in the markets that nobody wants to open, which is Mexico, Brazil, and you have the local experience, the reverse flow, which is the one that nobody wants to do, which is Real to USDC or MXN to USDC, which is 95% of our order book right now, it's going to be the biggest haymaker in the market, because the demand of companies in Mexico that try to bring imports from China, it's huge in comparison to what the remittance market in the US to Mexico is. So now we're falling into a game of trickle-down economics of the TAM just keeps getting bigger and bigger and bigger and bigger and bigger. And there's a piece of the pie for like everybody of us. But at the same time, liquidity, compliance, spectacular customer service are going to be like the end game from going to early stage to late stage. And that's where I think stablecoins are going to have like a big validation. And then liquidity, but that's a topic for non-USD stablecoins that we can chat later on. So yeah,
that's amazing. And like, thank you for like being super clear on like putting like 1 and 2 and 3, no? Because like, as you say, like the market has changed, no? And like maybe 3 years ago or 5 years ago, you just needed to have crypto. You needed stablecoins, you needed Bitcoin. So you were willing like to pay like this 2 or 3% spread and whatever. Like you just need access. And now like access is everywhere. It's super easy like to on-ramp on local currency and then buy like any kind of crypto you need. And there will be some point in which like we cannot tag spread anymore, you know, like if you're charging, I don't know, like 10 basis points or 5 basis points or like whatever, you don't have much margin to cap. So like relying on stuff like compliance and how you treat your customers, I agree 100% that it's going to be like key to differentiate. My follow-up question is like, you mentioned you just opened China. I think it's a complex market because some stuff you just have said, because like you have to settle on different countries like Hong Kong or Singapore. But have you seen any different in this couple of weeks on like the clients or the needs or like the relationships you need in LatAm compared to such a distant market?
I just find that the invoices are very funny. So you're obliged when you have to send a payment to China through SWIFT that you need to attach like an invoice to say that the X amount of money that you're sending to this company has an X amount of deposit to be done. And it needs like a proof and a stamp that it has to reach to this beneficiary account in mainland China or in Hong Kong that needs to have like a commercial purpose behind it. And this is very funny because sometimes we see people buying elevators for a plaza, and then I think just yesterday we had like an order of like $1 million for PS5s, and I'm like, who the fuck is buying this or who is doing it? So you basically get a combination of very brick and mortar businesses that buy wholesale, or then you have specific categories of items that either fall into construction for a specific shopping mall in Mexico that it's in like another state, and you have to do like a lot of due diligence behind it to see if it's actually real, and then you have to Google an article that they're actually building a department store in next state, and they still haven't done like the elevators yet. So it's funny because yes, if we have to put it in a single label, it's import export. Let's talk about it there. But then that targeting of import export, it's basically a mix of consumer and business that they just intertwine into local economic activity. So basically, we're just helping move the flow from A to B so that these products get shipped faster from Mexican customs into Mexico, and then they can provide some sort of dynamism into the local economy. And then when you look at the pricing of when these people buy wholesale, sometimes I even tell the customer when there's full confidence, like, if it's fine if you can give us 5 PS5s instead of the total spread so that we can put them in the office. So
That's it.
I guess
You can swap. You can swap the
Yes.
PS5s.
Yes. So at the end of the day, first of all, customer service on this is hilarious because are you guys seriously buying $1 million worth of PS5s for what? And then on the other hand, is like there's a lot of intra-communication with correspondent banks, and then not even with banks. You're basically having to deal with the customer. So sometimes I get sent a screenshot from a payment that happens in China, and it's the guy on WeChat telling us in Mandarin, like, hey, the bank doesn't want to release the funds, and I have to write a letter on Claude that please release the funds to this right address, and then I have to write it in simplified Mandarin and then send it over. It's funny because stablecoin settlement a year ago when we started doing the industry was like very easy. It's like, okay, Caio connects through my API and he tells me a destination address and he gives me the pesos, I'll give him the USDC, and then he takes it from there. Now when you're trying to scale the business and it gets legit, it's like, okay, now I need to have a trading desk. I need to be the guy that knows how to talk with banks. And I also need to have like a series of templates when shit hits the fan to get the money out fast. Because that's what actually matters. Like, okay, the funds landed in the account and it's about to be credited. But if there's an RFI and if you as a stablecoin company can't do it, you won't be able to operate in China. The market is just shaky. And it's not shaky in the bad way that it's very gray or there's no regulation. No, there is a regulation and it's very strict. And if you start operating on top of PSPs or correspondent banks or a network of payment processors that you really don't want to deal with them on the top, your $60 million monthly TPV volume for PlayStations is going to become a $2 million one, or you're eventually going to lose the customer relationship. So, in one sentence, China is hard, man. But China is good at the same time if you operate directly from an emerging market. So if you're doing Brazil, China, or if you're doing Mexico, China, I think that it's going to be the next gold mine or the next gold rush in payments, simply because the industry is getting more knowledgeable and more well-informed of how stablecoin regulation is helping you get payments over to another correspondent bank that jumps a leg from the US and it gets to Singapore. And then from Singapore, you can send it to China and it takes a business day to get squared. But this is legit step 2. Legit step 3 is when companies start servicing JP Morgan. And we're a long way from that. So, yeah.
And I'm seeing this firsthand here at Lumx because, like I mentioned, the regulation is coming. Like in 2 weeks, things will get live and companies will be able to, submit for the license. But even before that, now we have been serving a lot of not only importers and exporters, but actually fast businesses that provide services to importers and exporters, and basically using our infrastructure to create kind of a full-on global account slash payments platform for them. And the coolest part is some of them are doing their first transactions in this process using stables and all those things. Some of them are actually doing a full-on stablecoin payout, and at first, it feels perfect because, okay, I can just do a Pix, which is instant. Then the stablecoins are credited into their wallet. They can just send the money to the beneficiary address. But now, for example, in Brazil, we need to apply the travel rule. And things start to become harder and harder because now I need to identify the counterparty, making sure that it is a hosted or unhosted wallet. So how will I identify an unhosted wallet? So things are now becoming more and more, closer to kind of the traditional experience that they have, but of course with the whole benefits that we have in the industry. So a follow-up question that I have on that, you mentioned one thing that exactly what I'm experiencing here, which is now I'm the one who needs to talk to the banks. I need to understand how they talk. I need to understand how to deal with them and all this stuff. So the funny part of that is, have you thought about that when you created the company? Like when you create a crypto business, did you think about okay, maybe some years from now I'll need to actually talk to the banks, which is basically something that years ago crypto was like very far from.
First of all, I hate wearing a suit and tie, so we can start from there. I never imagined that at scale you would basically have to suit up and tie up and just go directly to a bank to negotiate good effects or just like operational bank accounts to get liquidity from Circle. And it surprised me because initially we had these conversations 3 years ago with the biggest commercial bank in Mexico, and they understood how the Circle Mint flow works. So initially, let's start from the biggest assumption a lot of people have in the industry is that banks are dumb. No, they're very smart. They are not going to shut your accounts off. They're just going to offer you a suite of services like growth lines, FX, credit, payroll, whatever, to monetize as much as possible from the current business infrastructure that you're trying to offer your end customer. They don't want to push your business off because they don't have the distribution capacity to do that. So talking to banks, first of all, starts in a commercial endeavor. So basically, everything you do is your presentation card. Putting on a suit and tie, I guess that it had to be very important. It is. And then second of all, having bragging rights with volume helps a lot simply because the bank is going to open you the doors a little bit better. It's not the same thing when the bank offers you a bottle of water than when they offer you a beer or a La Croix at the high floor. It's two different things. the whole perspective of dealing with banks changes a ton. And then I guess that regulation-wise, the best thing that I can tell, and it's a lesson that we at Capa have firsthand. First of all, in a customer perspective, it's if your customer is not willing to submit an RFI for the travel rule so that you can recognize who is the end beneficiary of that transaction, then that is not your customer. And then in all the turmoil that's happening in stablecoins right now, I think that the best thing that founders should have firsthand, instead of selling it as a technological suite or a layer on top of a lot of third parties, have your principles spot on. Principles open a lot of doors, and it sounds very boring, but the moral compass of how you negotiate with banks, how you negotiate with end customers, and if you take any shortcuts on it, eventually the depth is going to come and it's going to shoot back. Right is right, even if nobody's doing it. Wrong is wrong, even if everybody's doing it. And in a very fast-paced industry, when you're dealing with very boring stuff like other people's money, it's just very good to be spot on. Like there's transactions that we have once or twice a day that they don't have a routing number, so it's done as a domestic wire. And I would just rather for the customer to give me the routing number instead of me Googling it, trying to be smart, simply because it's another person's capital and another person's timeline. And that's also going to happen with banks. Banks expect you to behave on a rule book that they have internally. The first time you're going to get a slap in your arm if you're a big customer, of course. But if you're not a big customer and they give you a chance, they're just going to shut everything off. And your operation is going to take a hit. And that loses customer confidence. There's no way to recover for that. You can say sorry once to a customer. Second time you say sorry, it's on you. And it's on the customer to say if the relationship is still going or not. Did I imagine talking to banks? Yes. Did I imagine to them talking them at this scale when we launched the company a year and a half ago? No. Do I think it's going to get easier from here? Yes. But I think that it comes from partnering with companies like Bitso, for example. Bitso is like the Cross River Bank of Mexico. They have an amazing disbursement infrastructure. I don't do FX with Bitso, but I love doing pay payments with Bitso simply because it's scalable, it makes sense, the pricing is good, and they understand the core of the business model. So in frequent RFIs, it's going to be easier to explain than going to another provider X that we're not going to mention the name just because the market is very competitive and we don't want to throw anybody under the bus. And then on the other hand, I do think that partnering with local regulated entities that have access to the local payment system lets you build a report of when you're trying to expand to plan B. And it's not that you're basically just going to teach Bitso. Bitso just basically works in the infrastructure or in the risk matrix that the bank doesn't want to take with enterprise payments. And then the bank just handles a partied system. A partied system, it's basically that everything is regarded first party. So Capa operates with Capa through the bank, but Bitso is the one that does the bundle payments for Capa. So the quest of talking to banks is building rapport, building a transactional history volume, and just having the right customer relationship. And then plan B is just getting that Suantayan and hopefully that they give you like a cappuccino or a LaCroix in the middle. So yeah.
That's interesting because like we curse a lot on regulation because regulation is becoming expensive. You have to hire more compliance guys, more like legal team, like do more reporting. But we spend so many years like dealing with banks at the level you said, saying, hey, please don't close our only account that connect to country A or country B, like local rails, because it's our own chance to serve customers. I do think that regulations are going to help in that regard because like banks are not going to have like the same risk aversion that had on the past and are going to be willing like to open more credit lines and accounts like to stablecoin related business. It has a big cost because it's becoming super expensive and like margins are affected as Caio was saying. But yes, and then on the second topic you mentioned, we have worked at Bitso like very hard to build like the kind of the tools for the scalability you were mentioned Juandi at the beginning because like we do think that like market is super competitive. We cannot rely just on pricing. Like we do have to rely on like having the right partners, having the right people on the bus. That's why we launched like the push, which was a stablecoin accelerator. Like both of you participated. So how did you improve or how did you like affect or like benefit your business like partnering with companies like us? It shouldn't be just Bitso. That's like I'm talking about Bitso because it's like what I know. But at some point you cannot be a lone wolf anymore, like doing just business by yourself. But you have to start partnering like with different like clients or different big companies in terms to like access a specific country or a specific business line. So how was your experience on that path?
2 years ago, everybody wanted to pitch the next Bitso killer. Internally, we always thought that
I
was
remember,
one of
yeah.
the stupidest analogies because eventually Bitso was going to evolve from a consumer exchange to more B2B related, and then it was going to become a financial stack. That's normally how companies evolve. Everybody when they started their first startup wanted to do a consumer company, and they eventually found out that B2B SaaS was just way better. It is way easier to monetize. And then like at the same time, instead of the pitch that everybody wants to kill Bitso, in Capa, what we thought was like, how can we become a core stack of what a company like Bitso would need? Why? Simply because you partner up and eventually the relationship goes two ways. You said the lone wolf analogy. Nobody in this market wants to be a lone wolf because if you stick it up to another company, there's going to become another time where somebody's going to stick it up back to you. I do believe a lot in bad karma and bad debt. But initially, something that helped us out, for example, partnering with companies when we want to penny test new markets or we want to get liquidity to market make local stable coins, the relationship goes both ways. When we started doing market making for Bitso and XNB, we of course have the best FX rate possible to keep the peg into USDC. So what we basically did was offer Bitso an alternative payments corridor for transactions that are less than 100 grand that need a swap as close to spot as possible so that we can close the customer together. And then eventually Bitso gave us like a fantastic suite of services like collateralized liquidity or a market making account to get liquidity of the order book. Or sometimes there's even moments that companies like Bitso and Capa share flow, that there's flows that Bitso doesn't want to take that they send it over to Capa and it's very compliant, but the volumes are not fancy enough so that Bitso lands like a specific rate that they just want to do it. So it's not that we're feeding off the little bugs and parasites that Bitso leaves for companies like Capa. I just think that once you start offering a service stack to companies like this ones, the whole relationship changes. Now, let's focus a little bit more on the push. Having an investor like Bitso in your cap table is a good value add. Whoever tells you that you're just taking the money because of the brand value, they're dead wrong. I do think that having an account executive that actually cares about the product and tells you Merry Christmas, which happens a lot with Bitso, that they write us on every single important and relevant holiday. I think that one of them a year ago sent me happy birthday. Having that specifically niche and tailored customer service plus them having an interest in your company, it changes the narrative a little bit more. First of all, as a company like Capa that's going from early stage to late stage, it's an easier sell. The first question that every VC is going to tell you, oh, but what if Bitso takes a piece of your business. And I'm like, first of all, they took it because they understand that they can't do all the things that Capa is doing. And then there's a monthly invoice that they pay for it. And that's very cool. And then I pay them a monthly invoice too because they handle all of my banking needs to disperse to first party and third party payments. And then let's say that it's not a company like Bitso, but let's say that it's a company like Lumx or like Capa that's trying to look for a specific value add. These things or these programs give you a push, and this is for very commercial reasons, of course, just so people stay with the name push inside their heads every day, to launch and deploy faster in markets. Sometimes when you're building a stablecoin company, you just want to do everything by yourself, and you start choosing a Frankenstein of partners that they don't eventually connect with each other. And that's going to shoot bad when you're trying to close a customer that's bigger than $2 million in volume per month. Bitso as a unified stack, they help a lot of early stage companies. Like Capa, they helped us. We initially, until today, we use Bitso's cross-border infrastructure with Bridge just because it was easier to integrate because we had the whole documentation at hand. And they got us very good pricing to stay competitive inside the market, because everybody should understand that once you get too big, distribution gets very hard. And it's companies like Caio's or companies like ours that were trying to scavenge those flows that because of commercial efforts or because of pipeline, Bitso can't get. And eventually, everybody benefits out of this. So I guess that if I had to leave this with a big question of interest for the people watching this, is like, are you seriously going to consider the biggest enterprises or companies that have built 5 to 6 years of history in the space your competitors? Or are you going to consider them as a relevant partner for you to get to where you actually need to at the current stage? Eventually, companies get too big and they're eventually going to compete with each other. I don't imagine a timeline in 5 years where I'm not going to compete with Caio. But at the same time, we all complement with each other. We provide a service stack for the needs that they have, and everybody profits out of it. So who doesn't like making money with friends?
Amazing reflection. Thank you, Juandi. That was super interesting.
Yeah, I think you are 100% correct. I'm with you on that. Like you mentioned, even if you wanted to, right? Let's say, okay, I want to do everything by myself. I need to get all the licenses. That I want to get all the direct relationships with the banks. I want to do all the integrations by myself. I will take 10 years, 5 years. I don't know. Like 5 years from now, man, I don't even know, how things will be. So that doesn't make sense for me to try to build everything in house. Like not only from a time perspective, but from a money perspective, because it, of course, is very way more expensive. So we also have this culture here of trying to find great partners that we can add value, then we can also receive value, and we build together and we grow. So I think one of the main lessons that we had since we started the company is like that, because you always start thinking, okay, I will do anything by myself because I trust my team. I think we are a good team. We can do things together. But we ended up figuring out that, okay, maybe I cannot do this thing by myself. But yeah, I think to get to the last thoughts here. I've been following you for a while. Of course, we met each other. We have been together in the industry for a while. I have been seeing that Capa has been growing. You have been posting a lot the growth in TPV. Congrats! I'm really happy for you. Just wanted to figure out like what would be your next steps from now. Like, what's your perspective for 2026?
If last year had a lot of noise, this year is going to be 10 times harder. Everybody wants to build things that were outdated 3 years ago. When Dollar App launched in Mexico, I swear to God that to this day I'm a power user of Dollar App, and Dollar App is my bank. So I still don't get why people are starting to build a lot of consumer neobanks, simply because the market, I just think that if you own distribution, congrats. But you don't eat based out of distribution. You eat based out of economics. You eat based out of liquidity. So the real narrative of where I think the market is probably going to head on 2026 is that we're getting mature. 2 years ago, we didn't have the Lumx's and the Capas that we have today. So the whole script of what we used to sell to enable financial freedom to consumers and businesses, bullshit analogy, that doesn't work in the market anymore. Now we have to refine our pitch. Now we have to get better economics. Now everything has to make sense because the market is about to get legit. it hasn't become legit yet because we're on the venture side of things. Venture is a word, it's a world of fugazi. People take on bets in people like Caio or in people like Juandi. And you can work yourself off vibes until Series A. But if you don't grow, and if you don't show a persistent, sustainable business model with very good economics for a fintech, you're going to have a hard time scaling, and that's going to be harder to sell. And if founders that are with their principles aligned, and they have a good narrative, and they have liquidity, compliance, and a solid story that's going to take them to become the next $1 billion in revenue, or the road from 2 million ARR to 10, then I don't think the market's going to get big. And we're going to stay in the same cycle that crypto has always had, where every tweet is, oh, the institutions are coming. BlackRock is buying our Ethereum. We're going to stay in this speech or in this cult where the institutions are going to come and target stablecoins, when it doesn't have to be institutions, it's going to be us. And the market is going to end up in two ways: a huge M&A wave where the big companies are going to buy each other out, and it has started. That was a prediction I did for a pre-seed pitch 2 years ago. Or what's eventually going to happen is that you're just going to become a deeply embedded product in a lot of banks and in a lot of regulated financial institutions, and that's what Capa aims to be. We started doing it with local currency USDC. The non-USD stablecoin market doesn't even have a thesis, and I think that it's going to work out because it's not a supply game, it's a volume one. And there are going to be amazing liquidity corridors on top of BRLA, on top of BRC, on top of MXNB, on top of MXNE, that they're going to be crucial towards converting local currency into dollars and dollars into local currency. And that's where I think the real pricing crunch is going to happen. A market is going to be way more standardized. And then the industry is going to get some serious recognition. This is not about, oh, Nubank is releasing its own stablecoin, or oh, Revolut is releasing its own stablecoin. The real use case for this is payments. It's sending money from A to B. Stablecoin issuers are a big thing, and a lot of companies are going to do stablecoin issuance. But I do not think that's going to be a relevant market, because if Circle is a public company and they have to make money out of stablecoin issuance, and now Circle is charging companies like us 2 to 5 bips to burn USDC into dollars, payments is only going to be, it's either going to be payments or chains. And I'm sorry if we're stretching this over 40 minutes, but it's like, if you're a general purpose layer 2, let's say chain X that sits below Ethereum but doesn't have a market fit on payments, you're cooked. Like, you are just going to be left out of the play. If you stick into this DeFi thing that people are just going to deposit money because the yield is high and we don't know where it comes from, that's not your thesis. Payment chains are going to win. Who do I think is going to win? Polygon, most definitely. They are locked in. They know what they're doing. And there's a lot of noise.
They just became a regulated US company, right?
Yes,
Crazy.
but they have, yes, and pardon my French, they have their shit together. They know that they have a lot of money in their treasury to buy a regulated entity, to offer a service stack where they already own the chain and the fee distribution. Instead of driving the value into token value, like how much POD is going to be worth for people at stake, and they just give value to the ones that are actually using the chain, which is us, that are moving billions of dollars in volume month over month, the token price is eventually going to go up eventually, and they have a product that they offer as a core stack. So they're going to make revenue from everything. And then payments. Distribution is going to be such a big thing in high ticket orders that only the blockchain is scalable for it. I don't see the blockchain being as big as people think for consumer payments. I think it's going to be legit. It's going to be a legit thing to send money from A to B using USDC. Like, I need to send money to Caio because we drank 20 caipirinhas last night. Yes, that's a very good use case because I'm not based out of Brazil and I don't have pics. But then I do think that the real use case is just going to be enterprise. Those 200K payments, those 500K payments, those $1 million payments, using the blockchain lets you cut off corridors fast. And it's not a shortcut. It's just a very strategic bet on where the payments volume is actually going to flow. And I do think that companies like Polygon or blockchains like Solana or even companies like Coinbase are starting to find specific market fits so that their blockchains are not general purpose. Caio left, but I think that he'll be back in a second. I think that the market, Julián and Caio, which you will hear it afterwards, It's not becoming from we sell a dream or we sell like this blockchain can be served for whatever. Now that blockchains made a lot of money from the last cycle, they either need to know how to spend it so that they can offer a stack for us and they can monetize from it. And then we are the ones that bring distribution over. That's my prediction for.
Yeah, and actually, like we haven't seen, like we also have our consumer part at Bitso, and actually it's becoming very difficult. So we have millions of customers, and like new customers are onboarding every day, but it's difficult. Like I cannot convince like millions of people like to start paying for services using crypto or just for the sake of. So I cannot convince like every remittance sender or receiver to use crypto instead of the traditional markets. But if you like convince the companies that the blah 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 company, remittance company, can send the whole flow using stablecoins instead of like traditional markets, it can be cheaper. It can be so the whole like market can be over stablecoins even without people knowing that are stablecoins at the back. But I don't know. I do think, and I agree with you that like only with this aggregated volume, this can work, and it's gonna be overpayments. So, Caio, we'll recover you, but I think we are ready to wrap up. I don't know, Juandi, if you have like any final thought to share.
Go out there and win. The industry is big and there's money for everybody. So I guess that if you don't want to grow your TPV, I think that's more of a company problem and something that you have to target specific ICPs and finding the right partners so that you can get a proper growth. There's nothing wrong in getting in getting a helping hand. That changes a lot of narratives for you. And this is a win and help win business. Like there's no way on earth that companies like Capa wouldn't offer a service to Bitso or to Lumx or to BRLA or to BlindPay or to the other stablecoin companies that need to expand into Mexico simply because we just consider them as competition. It's an us against the big folks, and it's not to put any enemy ties on it, or it's not to bring any hostility. But at the end of the day, it's a new vertical. It's very novel. We're competing against banks and the AI folks. AI is like getting all of the mind space in the venture capital space, so it's a little bit harder to pitch sustainable growing fintech. But at the end of the day, I think that it's a win and help win business. This is definitely venture backable. This is where the next billions and trillions of dollars in revenue are. And it's simply a change of narrative of how payments are going to be solved. It's the same analogy that we had when people were using gold as currency and then they changed to fiat and then they changed to using electronic payments and debits and checks. And now there's just another novel industry that has a faster settlement time, it has similar cost, and it's exploratory. And now based on mindshare, things just get bigger faster. But getting bigger faster doesn't mean that it has the foundational models to scale into trillions and trillions and trillions and trillions. It's a matter of us, founders and companies and enterprises, aligning on what the real value add is going to be. Because if we let third parties decide what the real value of this is like going to be, there's a lot of theses that may just not work. And that's the natural things of how markets go. I think that a lot of companies are not going to work. I think a lot of companies are going to work. I hope it's us that work out. But at the end of the day, man, winning and helping win, it's the biggest analogy for early stage, late stage, and people that are trying to partner up to bring more volume. It's where I think the industry is heading. So, yeah, cool.
That's it. That's a wrap. And
Va que va.
yeah, thanks, man. Appreciate it.
Cool.
We're happy to have you here. And big fan of what you guys are doing at Capa. Happy that you guys are growing. Let's grow together. This year is the year. And that's it. See ya.
Nos vemos.
Thank you very much.
Bye bye.